Welcome to FX Street, currency in play. I'm joined by Ryan Littlestone. He's a trader at forexflow.live. Morning to you, Ryan.
Morning, Nick.
Let's look at the headlines. In terms of the euro US dollar, day of consolidation, risk-related events ahead. In terms of British pound against the US dollar, focus on UK Prime Minister's May speech and inflation correction. What are your thoughts on those pairs before we go into the charts?
Yeah, the pound's interesting this morning. You know, we're back in the political mess again.
Yep.
May over the weekend, yesterday saying that she's not scared to sack Boris. So she's slowly starting to stamp her authority down on what's going on over there, which she needs to do. She's been under the cosh a bit recently,
yep,
and
she
needs to come out fighting, and the market's taken that positively today. We also had that sort of inflation correction. It was the unit labour costs. They used the wrong figures at the ONS on Friday, so they corrected those this morning by 8 pips. But it's part of the whole inflation picture. But it's an indicator that the Bank of England look at. You know, how much companies are spending on their labour, and the correction up could have some thinking that hikes are going to be closer than they expect. But
so would you go for an interest rate hike in the UK in November?
It's a tough one. The way they're talking, you've got to listen to them. You know, if you never fight a central bank, and if they're talking about hikes, then the chance are there's one going to be coming. Whether it's the right thing to do is another question. You know, we're seeing the Fed who are saying that they're hiking on the back of projected inflation rises, but they're still in a date they're not seeing it.
Yeah.
So it's going to be a tough one. We've been here before with Carney prompting hikes, and you get to the time you think it's going to happen, and they find an excuse not to. So
the unreliable boyfriend, as I recall. Okay, well, let's go into some currencies. Take a sort of look at the longer trends here. Let's kick off with dollar yen. Again, a little bit of no man's land around here.
Yeah, one of those long consolidation phases
Yep.
that we tend to sit in this pair. Lots been made of the Fed hike. You know, it's pretty much priced in that they're going to hike. You know, probably in December. The tax plans is what's keeping a bid in the pair, but we're not breaking any new highs. You know, we had a poor non-farm payrolls in terms of the headline number on Friday, very good wages number. Well, what we're seeing, we're getting all this good news. We're getting the tax plans, we're getting good wages numbers, inflationary pressures, but we're not breaking any ranges, and that's the important thing when watching this pair. You know, up at those 114 highs. You know, that's a strong top up there, and if we're not even challenging there, you've got to ask the question: how far up have we got left to go? Even this phase we've got from that 111 mark, you know, we're not breaking any higher. We're going sideways within the range as well.
Yeah, I think that's be quite a difficult pair to trade at the moment. So,
yeah.
Okay, well, let's see if anything is clear on the next one. Cable, Great British Pound against US dollar. I think it was the worst week this year for cable. All traded by the politicians. Again, momentum-wise, with the RSI starting to tick up, okay, do you think the buyers are going to come in around these levels?
No, I don't think they will. I think they've been scared off again.
Right.
You know, we had that strong rise, you know, from 127s, wasn't it, out to 136. And, you know, we hit the roadblock with Brexit and political worries, and bang, you know, we've undone that in the best part of a couple of weeks. So it's a reminder to traders that, you know, no matter how high the pound goes, there's always these risks still bubbling under the surface,
yep.
and that's going to make it a rally sell rather than a dip buy. But get down to that low again, you know, around the 127 area, and you probably see the buyers step in. I'll be inclined to think they step in around the 128 mark, just to protect those lows. But we've had a pullback this morning, as I say, on the main news. We're up in 131, you know, sort of 10, 11. And you got to wonder, is that going to be just some short-term noise and we head back down again?
Right, understood. Okay, so let's go on to euro against the US dollar. Again, the textbooks would suggest that this is sort of some sort of topping formation around here and going into the right-hand shoulder of a potential head and shoulders pattern. If you're a non-technical person, that's meant to be a reversal signal of some magnitude. Okay, looking purely at the charts, if you knew nothing was going on geopolitically, you'd be short that, wouldn't you, at this stage?
Not here. If you look, we've seen a nice bottom being put in place around that 117, the low 117s. Yes, we have had several attempts at the top, so we've always got a chance that we do break lower below 117. But while we hold that level, you know, that's where you want to look for longs. But every time we keep testing it and testing it and testing it, at one point, it's, you know, the pressure is going to be too much; it's going to break.
Yeah.
So if you're going to trade longs from this 117 area, keep your stop fairly tight,
okay,
so below the 116.80 level. And if you get a decent bounce up to 118, that's probably where the seller's going to start emerging. But I think we're going to go a little bit sideways here until we get to the ECB meeting, and then we'll see how strong the Euro buyers want to take it.
Right. Okay. I see there's a little gap down there still to be filled, and remember, gaps always get filled. Let's move on to gold. We've had an Elliott wave technician come on and suggest that it was right for a pullback to 1,300 US dollars. Okay, I don't think his wave extension suggested it was going to break 1,300, mind you. What are your thoughts on gold?
Gold's an interesting one. I actually took a long last week. A couple of us in our live trading room, we took a long because the analysis says that in the Chinese Golden Week, which we just had, gold sells off. We've seen that, and then it picks up in the new week as China comes back to the table. So a little bit of a risk trade.
So it's almost like a calendar play, right?
Yeah, like a calendar play, seasonal play. So, and it's up again today. I was in at 12.78, and we're up into 12.83 and around those levels now. So this is just one of those ones. It's quite a small trade. You know, I'm not one for having a punt, but I've got to stop below that 12.50 area, and so far I'm happy with it.
Okay, in terms of momentum, it's probably acting on your side as well.
Yeah.
Okay, let's wrap up with the economic calendar today. Nothing really there to move the markets?
No, I mean, Lauch and Sloger speaking, but it's probably going to be on, financial risks and that sort of thing, regulations. We do have a heavy week this week as central bank speakers. There's a World Bank IMF event coming up from Wednesday, and Jaggi and all the top pods are going to be there. So we're going to get plenty of chatter out of the central banks this week.
Right. So of all the pairs you've seen at the moment, what's your highest conviction?
Highest conviction, I still think the euro. Euro longs is still good while we hold that 1700 level. Anywhere down to 115, that's going to be the big point if we get down there.
I think I saw one piece of research, 115.
Yeah, that's a big level I'm looking at, yeah.
Last stop saloon. Ryan, as always, thank you very much indeed for your time.
Thank you.